When it comes to investments, security and returns are rarely found in one sentence. But in this video, we are going to learn how to make money while investing securely in Treasury bills. We shall also learn what are these so-called Treasury bills. How do you invest in them? How do they compare with other alternatives? How do they work? And how do you invest in them? We shall learn everything that you need to know about the Treasury bills step by step. But before that, I welcome you to join the quickly growing family of Moneyversations who are go-getters and believers who are ready and radical to change their financial lives. All you need to do is to subscribe and like this video. Let's get right into it. Treasury bills, which are also known as T-bills, are secure short-term investments that give you a return after a short commitment of your funds. One can choose to invest in Treasury bills either as an individual, but you can also invest as a corporate body. There are 4 things you need to know about the Treasury bills even as we look into them. Number 1, they are secure. Investing in T-bills or Treasury bills simply means you are loaning your money to the government. In other words, you are simply investing in the government. And number 2, they are short-term. The Treasury bills come in 3 different options: a 91 days, a 182 days, and a 364 days, which is basically like 3 months option, 6 months option, and a 1-year option. Number 3, Treasury bills have very attractive rates generally. Compared to other options of investments, Treasury bills do offer a very attractive rate, and this happens consistently. The other options I'm talking about here are the fixed deposits, the savings accounts, and money market fund accounts. And by the way, most of the money market funds do invest their money in the Treasury bills as well. That's a secret. Number 4, they are auctioned every week. There is always an opportunity to get in and invest since they are available each and every week. This gives you a consistent investment opportunity. Well then, how do you invest in Treasury bills? First, you will need to open a CDS account. This is how the government keeps track of who holds which government securities or shares. A CDS account is only opened once and can then be used to invest in several Treasury bills and bonds thereafter. So you will only need to go through the hassle once. In order to open a CDS account, you also need to already have an existing or an account which is already active with one of the local commercial banks. Then you will need to go and collect a mandate card from the Central Bank of Kenya or any of its branches countrywide. The mandate card is filled in bold letters, offering your contact information and your bank account information. 2 representatives from your bank also have to sign that form as well. This is to verify your details. I will leave a link on the description below to download a sample of the mandate card and the other forms so that you can check out how they look like even before you go to start the processes. When returning the card, you will also submit your ID or passport. And also you will need to submit a passport-sized photo which is signed and stamped by your bank or a bank representative. Now next, you need to decide how to invest since you already have a CDS account now. You will need to choose from one of the 3 options that are available, either the 91 days, the 182 days, or the 364 days. I'll also leave a link on the description below to the Treasury bills which are on offer this particular week. So even if you're watching this video somewhere in the future, it will still show you the Treasury bills which are current or currently on offer. You will need to use the recent interest rates to guide you on which option you are going to choose to invest in. And this is because the interests are not announced before the auction, but usually after the auction is completed, and this depends on the offers that are being received. I will clarify this in a very short while, so keep watching. The minimum face value purchase or the minimum amount that you can invest in these T-bills is 100,000 shillings. And any other figure that is above it has to be in denominations of 50,000. For example, 150, 200, 250, blah, 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 as you go on. Very important thing to note is that T-bills are sold at a discount. And therefore, the amount that you choose to invest in is the amount you will get at the end of the term. Before I confuse you, let me give you an example. If the interest is 10%, for example, and you choose to invest 100K for a year, which is the 364 days bill, at the time of investing, you will only deposit 90,000, not 100,000. And then you will collect the 100,000 at the end of the term. So once you have decided on the option that you wish to invest in, you will need to fill and submit the application form. Please note that the form has to be submitted to Central Bank of Kenya or any of its branches by 2 p.m. on Thursday of that particular week. The form usually has the following. It contains the information about the treasury bills that you want to purchase, which includes the issue number of the issue number of the T-bill, the maturity period that you want, or the face value that you want to receive at the end of the term. You also have the option of selecting a rate or interest rate, which determines how much you will pay for the bill. You need to indicate your personal information like your name, phone number, CDS account number, and the source of funds, whether they are from a local account or an offshore or international account. Remember, you are given two options of interest rates that you can choose from. The first one that you can choose from is the interest or competitive rate, whereby you suggest how much interest you are willing to take for your investments. The second option that you can go for is known as the non-competitive or the average rate, which simply means you are okay with whatever they will decide to give you. Now, after the forms have been submitted, the CBK then sits down to agree on the rate that they will offer. And usually it's from the average of those that selected the interest or the competitive rate. For anyone who quoted a rate higher than what is settled for, unfortunately, they won't get a chance to invest or they will be locked out. On the other hand, all those who chose the non-competitive or average rates, as long as the bid is below 20 million, they are guaranteed to receive a bill, or in simple terms, they will be absorbed. Usually, the maximum amount allowed for the non-competitive rate, or those who are okay with whichever the rate they will receive, is usually 20 million. You don't go beyond that, because they are always guaranteed a spot. Next, the results from the auction are released and published through the TMD or the Treasury Mobile Direct. They are also published on the Twitter account of the CBK and on the CBK website in the statistics section. Therefore, you will need to call or visit the CBK to determine if your personal application was successful and how much you need to pay for the same. The payment should be promptly done by 2 p.m. of the following Monday or Tuesday if Monday was a public holiday. For amounts that are below 1 million, they can be submitted in either cash or a banker's check. But please note that if you are successful and then you fail to submit the payment, you will be most likely barred from investing in any future treasury bills or treasury bonds. And now at maturity, the face value or the amount that you're supposed to get at maturity is usually sent straight into your bank account, but you can choose to reinvest by going through the above process. I hope you have learned something from this episode. Please leave a like and share your feedback in the comment section below. I am looking forward to seeing you in the next video. Thank you so much for watching.